The economy grew in the first quarter, but at a slower pace from late last year. I'm Louise Story reporting for Business Day Live. We will return to the GDP report later on with the CEO of Hedgeye, a research firm, and we'll talk to a Google executive about one of the company's most popular courses for employees. It's a course that helps them deal with stress. But first, we welcome Jim Stewart, the Times' Common Sense columnist. Hi, Jim.
Hi, Louise.
So I was thinking about you at the beginning of the week when this New York Times story came out about Walmart, an Arkansas company that was doing bribes in Mexico, because you had a column about a year ago that was eerily similar. So remind us about your column on Tyson Food.
It's amazing. Is this deja vu or something? I did a big column on Tyson Foods, a giant poultry meat processing company. They bribed Mexican officials. When a whistleblower came forward, they not only covered it up, but they just changed the payment so it wouldn't be so obvious and kept the bribe scheme going. Then, years later, when another whistleblower came forward and was threatening to go public with it, they went into the Justice Department. And the upshot of all this is a theme that I've been hammering in my column, which is, let's face it, companies don't commit crimes. I mean, Walmart can make statements, Tyson made statements, they'll say they're sorry, they're cooperating. But they don't commit the crimes, individuals do.
People.
So what happened to those Tyson executives involved in it? Well, the highest ranking one, and here's another sort of eerie parallel, the chief operating officer, administrative officer at Tyson, he took early retirement. He got millions of dollars in payouts. He got a consulting contract, and here's what really gets me. He got lifetime use of the corporate jet.
So this is the person who was involved in the bribery at Tyson, and he retired. And so the parallel is, of course, at Walmart. Tell us about the person there.
At Walmart, according to David Barstow's fantastic
Our colleague
story,
David Barstow.
Amazing story. So the same thing started happening at Walmart about a year after the Tyson incidents. And then you can imagine the Walmart executives watching the progress of the Tyson case and then thinking, oh, well, so what should we do about this? Should we blow the whistle on this? Because no one is really going to get punished. Now, when I talked to the Justice Department about the Tyson case, they said, well, we feel the penalty on the company, which by the way was a $4 million fine, we think that's sufficient to deter this kind of conduct. Well,
so look, right in another part of Arkansas, another company there, and they were having these same discussions. So let me ask you, do you think it'll make a difference? At Tyson, they did ultimately come forward to the Justice Department about it.
Yes.
And so, usually companies get some credit from the government if they bring the case to the government. But Walmart, they didn't go to the government until they found out that our colleague David Barstow was investigating this. So do you think, maybe Walmart will have tougher penalties or?
Well, I think Walmart, the Justice Department, in my view, needs to make an example of someone, and they need to hold some individuals accountable. And I think both Walmart and Tyson are in a special category of wrongdoers in that, yes, they did finally come forward when they had a gun to their head, more or less. But before that, they had covered it up. There was a conspiracy inside the company to bury this. And that, to me, does not deserve lenient treatment, and that, too, should be taken into account. Again, I don't want to take away from the fact that they're now in there and cooperating, which is what they should be doing. But I don't think anyone, including law enforcement, should forget that their first instinct was to obstruct. And in your column this weekend, you also cite a really interesting study of bribery cases from 2005 to 2010 that tracked, and it said that over 60% of the time, the company paid a fine, but no individuals were named? Not named, or even charged by the SEC on a civil case, let alone a criminal case. Now, there are some people who've gone to jail, and the Justice Department likes to point attention, but I went down the entire list of them. Now, there is one prominent executive, the former CEO of KBR, which is a subsidiary of Halliburton, who was sentenced to jail. But he's pretty much unique. You look at the people who actually get sentenced to jail, and they're people like this couple, two Hollywood producers who bribed the Bangkok Film Festival. And at the time they were charged, the husband was 83 years old and suffering from emphysema. I mean, I looked down the list, and I have to say these are mostly people who don't have the resources to fight back. And of course, the Justice Department is going to be looking at this Walmart case
just after all the criticism they've gotten over the lack of criminal prosecutions related to the financial crisis. And so the pressure is definitely on.
Well, and it should be on. And again, I don't want to prejudge this, and there may be a lot of facts that we don't know, but this is a very serious example. It's a very prominent company. And if the Justice Department finally wants to set an example, they have just been handed a golden opportunity.
Well, Jim, thanks so much for joining us.
Sure.
So Google is a company all about web searches, and there's a popular course there on their campus for employees called Search Inside Yourself. We're joined now by Skype by Chade-Meng Tan, who created that course. Hi, Meng.
Hello.
So your class is focused on helping Google workers reduce stress. Is there an algorithm for this, or how do you do it?
Well, actually, it goes beyond stress. This is a course on emotional intelligence. So there are at least two aspects. One aspect is intrapersonal intelligence, which is knowing about your own emotional process and being able to regulate it. And the other is interpersonal intelligence, which is intelligence about other people. So the intrapersonal intelligence component, there is, of course, a very strong stress management component, right? Because once you are aware of your own emotional process, you know how to manage it, you know how to calm yourself down on demand. But it goes beyond that. It also goes to how you motivate yourself, how you align your work with your deepest motivations, your values.
I see. So let me ask you,
yes.
Have Google's co-founders taken your class?
Not yet.
Do you think it captures the way that they approach work, or do you think they need to take your class?
I think that they are very intelligent people who already know how to deal with themselves very well. But I think taking my class doesn't hurt.
So anyone could benefit from your class. So your class is featured in a new book, and it's going to be in an article this weekend in the Sunday business section. Can someone just read about it and do it, or do they need to really take the class?
They can just read about it and do it. However, if they take the class, there are 2 or 3 other huge components. One is the ability to do this with other people, so there is a peer learning component. And the other is the ability to ask questions to an instructor like us.
So if I were taking your class right now and we were just starting, what is the first thing you would have us do?
The first thing is attention training. And the idea is to train your brain such that you can bring about a quality of mind that is calm and clear at the same time on demand. And that is the foundation of all emotional intelligence skills.
That's really interesting. Well, thanks so much for joining us, Meng.
Thank you so much.
The Commerce Department released first quarter GDP figures this morning showing the economy grew at 2.2%. That's slower than the 3% growth we had at the end of last year. We are joined now by Keith McCulloch, who runs a research firm called Hedgeye. Hi, Keith.
Hey.
Thanks for joining us.
Thanks for having me.
Okay, so, everyone says we're in a recovery, and we are. This is positive growth, but it's, small positive growth. What do you make of it?
Well, there's 3 big problems. There's the dollar, which we're trying to devalue at some kind of a pace that people want to keep up with Ben Bernanke, and QE1, IQE4 is what people are looking for next, I suppose. But there's the dollar, there's gas prices, and there's jobs. All 3 of those things are going the wrong way. You could see the dollar today in reaction to what was a very bad GDP report. So you slowed from 3% to 2.2%, and you're still using a deflator that's really a joke in terms of what actual inflation is, in particular at the pump. So you got $4 at the pump, you got a dollar that's going down that's going to keep those gas prices really high. And at the same time, if you look back to really a month ago, from a jobless claims perspective, jobless claims are running about 15% higher than where we were running in March. So we got a growth problem. I think it's because money's cheap, and money that's cheap is keeping gas prices high, and that slows the economy.
So let me ask you, if we keep growing at this rate, the 2.2% that we grew in the beginning of this year, how long does it take us to get the economy back to, a better period?
Well, you can't, functionally, you cannot have a strong economy unless you have a strong dollar taking down these gas prices. No matter what people want to talk about export growth and these cockamamie schemes to get exports up, 71%, the 71% that matters is U.S. consumption. The U.S. consumer matters. So if you have high gas prices, consumption is going to come down. How do you get those gas prices down? It's not about Iran, it's about the dollar. Iran, last I checked, nothing happened this week, but Ben Bernanke continues to maintain this QE1, QE2, QE3, Japanese type policy that keeps these gas prices elevated, and that's going to keep pressure on consumption, and that's why GDP is going to stay with it, really this kind of like 2% top on it, I think.
So now let me back up a little because, we're talking about this report and you're often on TV talking about these reports, but your firm, you're one of the results of the financial crisis, so to speak, because during the financial crisis, banks really cut their equity research department, and you founded Hedgeye. So tell us, what are the banks doing in research? Are you able to compete with the big banks on research?
Yeah, big time. I mean, we're taking a ton of market share because what we've actually done is just completely changed the model. Now, the problem with old Wall Street, obviously, is that it's conflicted, it's compromised, and it's constrained.
It's conflicted because the banks do the IPOs and they do research, or what are the conflicts?
I mean, there's plenty. I mean, there was prop trading, there's less prop trading, there's banking, there's ratings that don't mean anything. I mean, we could go on and on. I could probably spend all day talking about the conflicts, but the conflicts, the compromises, and really, you look forward at what people really need, which is they need research in real time. And the only way that you can actually deliver research in real time, and this was my basic idea, was to not have a broker-dealer. That's another big conflict of interest, really, in terms of getting consumers in particular and real-time investors, self-directed investors, what they need. They need to know what's hitting the tape, and the new tape, by the way, is Twitter. So people are watching the game in real time. They want to know what's going on.
But they're getting their info from Twitter.
Yeah, and they're getting research from firms like ours. Morgan Stanley, even if they were better than us, which I don't think that they are, humbly speaking, they have to wait to get their...
They're not out on Twitter.
They have to wait to get it through to compliance.
So now let me ask you, the banks have cut a lot of their stock research, but what industries have they exited that they don't really cover that they used to cover?
Well, I think the biggest issue that they have in terms of void is macro. Global macro.
Economic research.
That's globally interconnected. I mean, we got to get real with where the real world is today, which is globally interconnected. What the dollar does affects commodity prices, what commodity prices affects consumption in China, all the way back to Uzbekistan and obviously Illinois and all over the place. So you have to have research that tracks globally all these macro indicators, and I think that that's the biggest void because the sell side really hadn't prepared for that. The buy side has, and that's the interesting point.
The hedge funds and the pension funds. Well, I mean, we can certainly see from the American financial crisis and then the European financial crisis how very interconnected the world and the markets are. So thanks so much for joining us.
Thanks for having me.
That's all for today. Please stay with us online at nytimes.com for our continuing coverage. I'm Louise Story, reporting for Business Day Live. Thanks for watching.